Hi, this is Shubham from Monist and today in this podcast we will discuss about a securitization and how the securitization process works in India. Over here we will discuss the process, different features, different participants, benefits of securitization mechanism and main problem faced by securitization in India. If you want to read the full article about the securitization, then the link of article is in description. So let's discuss what is securitization. The process of securitization typically involves the creation of pool of assets from a liquid financial asset such as receivable or loan which are marketable. In other words, it is a process of repackaging or rebundling of a liquid assets into marketable securities. These assets can be an automobile loan, credit card receivable, residential mortgages or any other form of a future receivables. Let's discuss what are the features of a securitization. The first one is a creation of a financial instrument. The purpose of a securities can be viewed as a process of a creation of additional financial product of a security in market backed by collateral. So here the different receivables as we discuss are trenched together to get and create a new financial instrument. Second feature is bundling and unbundling. When all the assets are combined in one pool, it is a bundling, and when these are broken into instrument of a fixed denomination, it is an unbundling. Here different credit card loans can be bundled together to form a one security. Third feature is a tool of risk management. In case of assets which are securitized on non-resource basis, then the securitization process acts as a risk management as the risk of a default is shifted. Here basically, since we are bundling different instrument and forming a one, the risk can associate with this product can be measured and it is very much manageable. The fourth feature is a structured finance. In the process of a securitization, financial instruments are tailored structured to meet the risk return trade of profile of an investor, and hence this securitized instrument can be considered as the best example of a structured finance where every investor can get the instrument of a securitization based on the risk. The fifth feature is a trenching. Portfolio of a different receivable or loan or assets are split into several parts based on the risk and return. So they are carried at tranches. Each tranches carry a different level of risk and return. Over here we can get an example of a loans. Loans based on a credit score can be trenched and formed by a bundling into a new financial instrument. The sixth feature is a homogeneity. Under each tranche, the securities are issued of a homogeneous nature and even meant for a small investor who can afford to invest in a small amount, like a different tranches of a receivables by a particular company or insurance company. Let's discuss what are the benefits of a securitization. The benefits of a securitization can be viewed from an angle of a various party involved. The first party is from the point of view of an originator. The first benefit the originator which get is off balance sheet financing. When loan receivable are securitized, it releases a portion of a capital tie up in the asset, resulting in off balance sheet financing, leading to improved quality for a liquidity position which has an expanding business of a company. Second benefit is more specialization in main business. By transferring the assets, the entity could concentrate on core business as a servicing of a loan is transferred to a special purpose vehicle. Third benefit is it improves the financial ratio, especially in case of a financial institution or bank. It may manage a capital to weight asset ratio effectively. The fourth advantage is a reduced borrowing cost. Since securitization is used for a rented due to a credit enhancement, even they can also issue a reduced rate as for debts, and hence originator can get a spread, resulting in reduce in cost of borrowing. The second participant over here which gets the benefit is an investor. So let's discuss the benefit from point of view of an investor. The first benefit is diversification of risk. Purchase of a securitized backed different types of assets provide a diversification of a portfolio, resulting in reduction of a risk. Second benefit is a regulatory requirement. Acquisition of asset backed belong to a particular industry, say a micro industry, helps bank to meet a regulatory requirement for investment of a fund in industry specific. Third benefit is a protection against a default. In case of a reoccurrence arrangements, if there is a default by third party, then the originator shall make a good that least amount. Moreover, there can be an assurance arrangement for compensation for any such default. Let's discuss what are the different participants in a securitization process. Broadly, the participants in the process of securitization can be divided in two categories. First one is a primary participant, second one is a secondary participant. Let's discuss what are the primary participants over here. First one is an originator. It is an initiation deal or can be termed as a securitizer. It is an entity which sells the asset lying in its book and receive the fund generated through a sale of an asset. The originator transfer both legal as well as beneficial interest to a special purpose vehicle, which we discuss as a second participant. So let's discuss what is an SPV, special purpose vehicle. This is created for a purpose of execution of a deal. Since the issue of originator transfer all rights in assets to SPV, it holds the legal title of the asset. It created especially for the purpose of a securitization only and normally could be formed as a company, firm or trust as such. The third primary participant is an investor. The investors are buyers of a securitized paper. These may be an individual institution investor such as mutual fund, provident fund, insurance company, etc. Since they acquire participating in a total pool of assets or receivable, they receive their money back in the form of interest and principal. Let's discuss what are the secondary participants over here. The first one is an obligor. Actually, they are the main source of the whole securitization process. They are the parties who owe money to the firm, and these are the balance sheet of a originator. The amount due to obligor is transferred to SPV, and hence they form the basis of a securitization process, and their credit standing is of a paramount importance of a whole process. The second secondary participant is a rating agency. Since the securitization is based on the pool of assets rather than the originator, the assets have to be assessed in terms of a credit. Rating agency assessee can vouch for the strength of a cash flow, liquidity support, credit quality of security, mechanism to ensure timely payments of interest, and capacity to pay. The third secondary participant is receiving and paying agent. These also called as a service or administrator. It collects the payment due from obligor and pass it to SPV. It's also follow up to the defaulting borrower and if required initiate legal proceeds. The fourth secondary participant is agent or a trustee. Trustee or agent are appointed to oversee that all parties to the deal perform in the true spirit of a terms of agreement. Normally, it takes care of the interest of an investor who acquire the securities. The next participant is a structurer. It brings together the originator, investor, credit enhancer, and other party to deal of a structurization. Normally, these are the investment bankers who call arrangers of a deal. It ensures that deal meets all legal, regulatory, accounting, and tax law requirements. Now let's discuss what is a mechanism of securitization. The first stage is a creation of a pool of assets. The process of securitization begins with creation of pool of assets by a segregation of assets backed by a similar type of mortgages in terms of interest rate, risk, maturity, and concentration unit. Second stage is a transfer to SPV. One asset has been pooled, they are transferred to special purpose vehicle specially created for this purpose. Third stage is a sale of securitized paper, SPV. Over here, SPV are design the instrument based on the nature of interest, risk, tenure, etc. based on pool of assets, and this instrument can be passed through certificate, pay through security, etc. so that it gets monetized. The fourth stage is the administration of these assets. The administration of assets is subcontracted back to the originator, which collect principal and interest from underlying asset and transfer it to SPV, which work as a conduct. The fifth stage is recourse to originator. Performance of a securitized paper depends on the performance of an underlying asset, and unless specified in case of a default, they can go back to the originator from SPV. The sixth stage is a repayment of a fund. Special purpose vehicle will repay the fund in the form of a interest and principal that arise from the asset pooled. The seventh and last stage is a credit rating of an instrument. Sometimes before the sale of securitized instrument, credit rating can be done to assess the risk of a issuer. Now let's discuss what are the problem of a securitization in India. The first one is a stamp duty. The stamp duty is one of the obstacles in India under the transfer of of Property Act 1882, a mortgage debt stamp duty which even goes up to a 12% in some states of India, and it is very much reason for growth of securitization in India in negative way. It should be noted that since the pass-through certificate does not evidence any debt only able to receive, they are exempted from stamp duty. However, each instrument is responsible for based on the redemption of a duties. Second one is a taxation. Taxation is another area of concern in India. In the absence of any specific provision relating to securitized instrument in Income Tax Act 1961, the various ways to tax can be identified. Some area of opinion that SPV as a trustee is liable to tax in a representative capacity, then other are the view that instead of SPV, investors shall be taxed on their share of income. Clarity is also required on the issue of capital gain implication on passing payment to investors. Third problem is accounting. Accounting and reporting of securitized assets in the book of originator is another area of concern. Although securitization is slated to an off-balance sheet instrument, but in true sense receivables are removed from originator balance sheet. Problem raised especially when assets are transferred without recourse. The fourth problem is lack of standardization. Every originator follow own format for documentation and administration, have lack of standardization in another obstacle in growth of securitization. The fifth problem is inadequate debt market. Lack of experience of a well-developed debt market in India is another obstacle that is very key reason for the growth of a secondary market of securitized or asset-backed security. Sixth and last problem which we face is ineffective foreclosure law. For last many years there are efforts are going on for an effective foreclosure law, but still foreclosure laws are not supportive to lend an institution, and this makes securitized instrument, especially mortgage-backed security, less attractive as lender face difficulty in transfer of a property in event of a default by the borrower. We have huge expectation from Insolvency Bankruptcy Code 2016, which gives a more hope for this kind of security. So let's discuss what is the bottom line over here. Securitization is a typical process of monetizing different assets so that a lender can get his money quickly with interest, and the person who needs money get the solution to deploy his idea with the help of another capital. Securitization is a very key aspect in the financial market, especially for debt market, but it needs to more refine and regulatory requirements. So thank you guys for joining with us for this podcast. If you want to read the full article, then the link of article is in the description. Shubham from Monist View here signing off. Thank you.